Opendoor just closed Thursday's session at $6.16, down almost 8% on the day, and the way the price action unfolded tells a very interesting story. The stock actually opened in the green this morning. There was a moment early in the session where it looked like Opendoor might finally be catching a break after several heavy red days following the record date for the warrant dividend. But as the macro backdrop turned lower, as the major indices started bleeding, and as risk assets across the board sold off, Opendoor followed the rest of the market into the red and then just kept sliding. This kind of intraday reversal is something you typically see in high beta names, and Opendoor is absolutely in that category. When the market turns, it tends to turn harder. But to understand what really happened today, we have to look at the bigger picture. Because this isn't just a one-off red day. This is a continuation of a multi-day unwind that started last week after the stock hit $9.50. That peak was driven by a combination of momentum, insider buying, excitement around the warrant dividend, and optimism around Opendoor 2.0 under the leadership of Kaz Nejatian. Since then, the stock has essentially been grinding lower, giving back most of those gains. Some of that is normal post-event recalibration. Some of it is macro. And some of it is simple emotion. We are now 2 days past the warrant dividend record date. And historically, any time a company distributes a special dividend, whether it's cash, shares, rights, or warrants, you tend to see a period of post-event pressure. Traders who held the stock specifically to receive the dividend start exiting. Shorts who are waiting for the event to pass start pressing their positions harder. Liquidity that looked strong in the days leading up to the event suddenly evaporates. And you get exactly this type of move. The stock sells off into the event, sells off the day after the event, and sometimes sells off again on the following day just because the temporary boost to demand disappears. What makes Opendoor's situation especially fascinating, though, is that the company itself has been incredibly active behind the scenes during this period, and Kaz has been communicating some of that activity publicly on X. These posts give us a different lens on what's happening internally, a lens that is wildly out of sync with what the short-term price performance shows. And for long-term investors, that disconnect is worth paying attention to. The first post that matters came earlier today when Kaz shared that Opendoor is running its first company-wide hackathon. Not just engineers. Not just the product team. Not a handful of AI specialists. The entire company. Every team is building, experimenting, prototyping, and creating an AI project in a single marathon event. Kaz specifically thanked OpenAI, Cursor, and Gumloop for hosting office hours for the staff. This tells you something profound. It tells you that the company's shift toward artificial intelligence isn't superficial. It's cultural. This isn't just a technology they're bolting on to the sides of their existing workflow. This is the company rewiring its entire operating system around AI. When you run a company-wide hackathon, something usually reserved for deeply technical startups, you are making a statement to the market. You're saying, every function of this company needs to think like a technology company. Every employee needs to interact with AI. Every workflow is open for reinvention. It's one thing to talk about Opendoor 2.0 as a concept. It's another to actually implement it in a way that touches the entire organization. Then, right after that, Kaz posted something very different. A much more philosophical message. He wrote, "Wrinkles and a toy on the floor aren't flaws. They're receipts for a life well lived. We need to stop airbrushing them away to make everything look like a stale hospital out of a terrible sitcom." At first glance, this might seem like a random lifestyle post, but there is something intentional behind it. This message is about rejecting artificial perfection. It's about embracing reality. It's about valuing authenticity over polish. And in a strange way, it reflects exactly how Kaz presents Opendoor to the world. He's not trying to spin a perfect corporate image. He's not pretending the company is flawless. He's leaning into transparency and humanity. Leaders who do this tend to attract loyalty. They attract employee buy-in. And they signal confidence, even during volatility. The third post he made may have been the most important. Kaz said, "We had our first Opendoor 2.0 board dinner last night. 2 things were in short supply, carbs and pessimism." That is not something a CEO tweets lightly. When a CEO says the board is not pessimistic at a time when the stock is falling sharply, that is a direct message to shareholders that internal sentiment is very different from the short-term chart. Boards do not hide pessimism when things are bad. They become cautious. They become rigid. They start asking for guardrails. The fact that the board is leaning the other direction suggests that internally, The company sees progress that the market hasn't priced in yet. Now, let's connect these dots back to the stock performance. On the surface, the price dropping to $6.16 looks ugly. It looks like a breakdown. It looks like momentum has reversed and the bulls have disappeared. But when you break it down, the story gets far more nuanced. First, the macro situation today was terrible. Tech was red. Real estate was red. Small caps were red. High beta names were hammered. So Opendoor's decline is partly a reflection of the broader environment. It wasn't a company-specific event. It wasn't a guidance cut. It wasn't a financial warning. It wasn't fraud or scandal. It was simply a weak tape. Second, post-event selling is predictable. This exact pattern happens with almost every company that distributes a special dividend or executes a rights offering or spins off a tracking stock. Traders pile in for the event. The event passes. They exit. And the stock falls. Third, and most important, the internal trajectory of Opendoor looks better today than it did a week ago. We learned that the company's new AI home assessment tool is already live in several markets. We learned that backtesting shows that it's more accurate. We learned that the long-term result of tuning this model could be meaningfully higher cash plus offers, something that hits the core of their revenue engine. We learned that the entire company is now immersed in AI as a discipline. We learned that the board is optimistic. And because all of this is happening beneath the surface, the long-term thesis may actually be strengthening at the exact moment the short-term price is weakening. The question for investors now is what happens next. If tomorrow brings another heavy red session, then we might be looking at a continuation of the post-event unwind and the broader macro stress. But if tomorrow brings even a modest green candle, if buyers step in at these levels, if volume picks up, if short sellers start covering, then the story could shift quickly. Stocks that overshoot on the downside often snap back violently when sentiment stabilizes. And Opendoor is exactly the type of stock that moves quickly once the tide turns. So the takeaway for tonight's video is simple. Today's sell-off looks harsh, but the fundamentals of Opendoor 2.0 look better than they did earlier this week. Kaz is signaling acceleration, not retreat. The board is signaling confidence, not doubt. And sometimes the most meaningful long-term inflection points happen during the ugliest short-term price declines. What matters now is whether tomorrow brings a continuation of the breakdown or the first signs of a reset.